congrats on getting the deal done.
Thank you.
I was looking back at the conference call you had back in September when you were discussing the new deal at that point. You said to thrive, we have to go where the gold is.
Exactly.
Makes some sense. How does the Barrick deal enhance your ability to go where the gold is?
You know, it puts us into the footprints where you find world-class gold deposits. And that's where you've got to, you know, if you look at gold mining, the value of gold mining sits in the quality of the asset, because we can't prescribe the gold price. But what represents our revenue is the grade, the quality of our gold deposits. And between Barrick and Randgold, we put together 5 of the 10 top gold deposits in the world. And to be a world leader, it's good to have at least 50% of the best mines around the globe.
You do talk, though, a lot, I know, in the conversations you've had with your investors about longer term.
Yes.
And your goals longer term, although many people actually just want to make sure that you're going to be running the combined company longer term as well.
Yes, long-term. Look, mining is a long-term game in a very dynamic global economy right now. And the gold price, as you've just remarked, goes up and down, not necessarily in that order. And so it's as stewards of our owners, investors, we've got to make sure we allocate the capital and be able to deliver long-term returns, not only for our investors, but also our host country governments, who are a very important stakeholder in the relationship.
But what does this deal allow you to do differently or in a different way or scale that you weren't able to do previously?
So Randgold, before the merger, had 2 world-class assets, 2 of the top 10 assets, one in DRC, one in Mali. And over the last 23 years, we've delivered with one of the top performers in the FTSE 100, bar nothing. And Barrick brings a cluster of world-class assets, 2 operating mines, 1 developing mine, and a new project, all in the world-class category in Nevada, which is a very stable economic address. And then it's got these very big assets in Argentina, the Pascua-Lama, infamous Pascua-Lama in the Chile-Argentinian border. And it's got an enormously large mine in Dominican Republic, 30 million ounces. And then it's got some assets in Papua New Guinea and Australasia. So when you put that together, my point is if you want to be relevant in the gold industry, and we're running the risk of not being relevant in a public market that has massive market caps.
Yes.
And so, Barrick today really stands apart from all other of its peers.
What are those risks of irrelevance?
The gold industry is quite a small industry, $100 billion industry. And so if you keep operating as small little companies trying to make a turn on a public market that is a much larger entity, then you have run the risk of becoming irrelevant.
And then you told me that there would be some 20,000 employees and contractors. Are there challenges with managing the increased manpower that you need to make this new merger work?
My approach to management is flat as possible. What helped us in the past is being agile, more modern in the way we approach it, many more systems, a smaller corporate office, more control of the organization. And so what we've done is we've created 3 key executive regions: Africa with its own executive team, the Americas, North America, Canada, Alaska with another team, and then Latin America with another team. Each one of those are larger than the average size gold mining company today.
So, Mark, I think we have to talk about gold prices, because we're just coming off of a year where stocks had their worst year globally since the financial crisis. You saw defensive plays do better, the yen, and gold ended the year down. Is it frustrating to you to see that it's not getting its typical sort of safe haven love?
I think that we're our own worst enemies as gold miners, and I think that's why I celebrate today in putting these 2 companies together with a leadership that really has alignment on what we need to do. And we don't want to invest in We don't want you to invest in Barrick just because you need gold. We want you to invest in Barrick because you're investing in an insurance policy that is paying a return. And that's what Randgold has done its whole history.
But how closely correlated is your stock price to the underlying price of gold?
It is always going to be correlated. The big thing is, can you deliver value for your shareholders at any time of the cycle? And that's the key. And we, as you know, the gold price went up from 2001 to 2012, and no one made real money out of investing in the equity at the end of the day, because management didn't really take that opportunity and crystallize a margin that it could return back to shareholders, and shareholders need that in bad times. And so I believe that with this sort of asset quality, the quality of management, and our joint strategy of delivering real value for all our stakeholders, we will offer something that's different to the market today.
And when you were asked how long you're going to stay with the combined company as its CEO, you said as long as it takes. How long is it going to take?
Well, a couple of years is before we start seeing the real benefits, and I don't plan to leave just at that point. So I've always said 65 for me is some. I mean, I don't have a plan to retire. I can't imagine what that would be like.
I hear you.
It's a great time to be in this industry, and it's such a fascinating opportunity to be able to take everything I've learnt in my lifetime and apply it to a better, bigger, more exciting portfolio.